Hey, this is Joe from Ask Joe About Money. And today is going to be, I'm doing something new today, and I'm really excited about it because I think this is going to be really helpful, and a lot of you are going to resonate with this. Today is January 27th, 2023, 4:20 market time. The market's closed. And today I'm going to be doing the first, okay, so bear with me as we iron out all the kinks and we make it better, but it's all about starting, and today is number one. So this is video number one. So what is the purpose of Joe's daily recap, right? What's the purpose of it? The purpose of it is, I believe that in order for us to get better in anything that we're doing, including trading, we have to have some type of ritual, some type of habits. So I'm going to start this video by saying, and I'm going to do a separate video on that, but my habits and my rituals are the same every day, because what matters is where we spend our time, not so much what we're doing. So I talk about block time, right? So let me give you an example of, it's not an example, it's what I do every single day. Okay, and then we're going to get to the charts. I know everyone wants to look at the charts and wants to know where I got in, where I got out, but that doesn't happen by magic. The way it happens is this, and this is how it is for me. And also, let me say this, that what works for me may not work for you. It's your job to find out what works for you. But as I study the experts and as I study the best in the world in what they do, success leaves clues, right? So one of the things that I have adopted is a daily routine, daily ritual. I don't write down specifically what I'm going to be doing during those time slots, but I make sure that during those time slots, I'm doing what that time slot is allotted for. So let me give you an example. So my daily routine, my pre-market routine, what does that look like? Okay, I get up 4:30 in the morning. Okay, why do I get up this early? I found over time that it takes me a while. Okay, I'm slower than most. It takes me a while to get my mind. It takes me a while to sort things out. It takes me a while to get things set up in my mind, that is, right? So I get up at 4:30, and I get up so early, there's no bit of me that's rushing, because you don't want to rush as you approach the market. So I get up 4:30, spend the first hour or so getting ready, having coffee, taking a shower, things like that. 5:30, okay, I'm sitting at my desk. And now when I say sitting at my desk, I'm actually sitting on a couch at that point in my office. And what I'm doing is from 5:30 to 6:30 is I'm doing nothing, okay? What do you mean you're doing it? Nothing. You're wasting time. No, during this time, I'm not doing anything. I'm not meditating. I'm not doing anything. I am just between 5:30 and 6:30, just getting acclimated to just being up and my awareness. And then towards the end of that block, at about 6:30, I start turning on Bloomberg and I start checking the news. I start looking at charts, and I do that from about 6:30 to 7:30. Again, very low impact, very slowly. Between 7:30 and 8:30, I have certain calls that I listen to get me prepared for the market, to look at different things and different what's moving, what markets are moving, what's the news, what's the general macro picture. So now I'm getting more tuned in. Between 8:30 and 9 o'clock, I'm checking all my platform, making sure all my position sizing is correct, everything's okay with the account, everything is operational, internet, so on and so forth. So now I'm getting really close to its battle time. So now it's 9 o'clock, and now between 9 and 9:30, I'm waiting. Now I'm revved up, and now I'm ready to go because I've done all of that work, which doesn't feel like work at all. It feels very natural. And now I'm ready for the market. Now I'm ready to perform at the best of my ability. And that's really what it comes down to, is performance, right? Trading, you'll notice when I show you my charts, I don't have any indicators. I have one, but I don't really even use it. But it's performance, right? So what does performance mean to me? What performance means is that you spend all this time studying charts. You spend all this time studying your trades. You spend all this time working on your mindset. And again, I'm saying this, that's what I spend my time on, right? You may not be doing that. So if you're not doing it, that's something you need to do. These are all things that we need to do. And then when it comes time to perform, once you're well prepared, because I had no idea what was going to happen in the market today, but I'm prepared enough that when things happen, whether I grab it from experience, whether I grab it through intuition, I don't know, but I'm performing. And I found the only way to perform is by working on the technicals, yes, but more importantly, working on yourself and working on your mindset. So now the market opens. So as the market's about to open, or I should say between 9 and 9:30, now what I'm doing is I'm taking a look at the bigger picture. So one of the things I believe in is focus on one market and become an expert in that market. You'll see in the top left corner, I trade the MES. So the MES is a micro contract of the ES, or the S&P 500. And this is basically 1/10 of the size of the S&P 500. And really, this works really well because it allows me to scale in and sometimes also scale out of positions. So what I do here is, let me just pull this back. So let me go back, because I trade off of a 5-minute chart. But what I do when I'm looking at the charts in the morning at about 9 a.m., half hour before the market opens, I'm looking at the market and getting an idea of what is happening big picture, right? So what's happening big picture? So today would be, let's see, where would today start? Today started, so let's cover this up right here, it looks like, right? Hang on, what's that? Where did yesterday close? We're on a 30-minute chart, and the reason why I zoom out is because I want to get an idea I want to show you what my thought process is. This is yesterday's close, this is Thursday's close. So what I'm looking at here, when I'm looking at the higher time frame charts is, and again, trading, despite what some videos may want you to believe, is not precise at all, okay? It's not precise at all. So what I'm looking at here is, where are we in the scope of the last, if I just scroll this chart here, like, where are we? What do you see? Okay, what do I see? What do you see? The first thing I could draw is a trend line, right? So if I draw a trend line like this, not that I have to draw a trend line to see this, but essentially we're in an uptrend here, higher highs and higher lows. Then I could draw another trend line that connects these points here. Okay, so that's a more aggressive trend line. And then also yesterday, the market was in buy mode, and this is the trend line from yesterday. I generally want to be going with the trend, and there's going to be other videos that I'm going to show you when that's not the case. But I'm looking at this and saying, okay, we are in an uptrend. Okay, generally we're in a larger time frame uptrend. Oops, what did I just do there? I really don't know what I did then. Of course, the first video that I do, I'm going to encounter something that I've never actually seen before. How do I? All right, I just got rid of it like that. That's fine. All right, so I'm trading off of a 5-minute chart. So what I'm going to attempt to do right now is take you through my thought process of what I'm looking at and how do I make trading decisions. So if we go back to a 5-minute chart, and let's see where the market opened here. This was, all right, so the market closed here. This was on Thursday, and the market opened here. So we have a slight gap down, all right? So what I'm looking at here is that we have to always look in context, right? Because you can't just look at this in a vacuum, because the history is, because the market does have a memory, the history is that this is, right here is Wednesday, this is Thursday. The market bought from 39.64 all the way up to yesterday's high where it closed, 40.75. So that's 100 points in the S&P 500, and that's a decent move in 2 days. That's a pretty big move. In context, do I want to be buying? Again, this is how my mind works. Do I want to be buying up here when the market has just done this? Okay, I'm thinking long, right? But I don't want to necessarily be buying up here. And what I'm looking at is that here the market opens, and I look at what the bars represent, okay? I look at each bar, and I say, okay, these are 5-minute bars. So that if I'm looking to get long, but I have to have the market convince me of that. I'm looking here, and the first candle is green, but it has a big wick on top, okay? So not overly convincing. Small green candle. Again, another small green candle with a big wick on top. Same thing. So the first 3 bars are not very convincing. They're small green bars. We finally do get a green bar, but there's a wick on top. And then we get another green bar. Everything is pointing up, okay? I'm just not seeing big green bars that are closing at their highs. So I elected not to buy into this, and I waited to see what would happen, okay? So the first thing, then the next bar is a red bar. So what happens when a red bar formed? When the red bar formed, instead of them selling it, they sold it temporarily, but they actually bought that and it went back up, okay? So now I'm starting to get convinced that this is a strong market, okay? So I'm looking for an area to buy, but again, I'm more interested in buying on a pullback, but it's all dependent on what's going to happen. So next bar is a green bar, but again, big wick on top. And now to me, this seems very overextended. And again, this is something that's intuition because I trade this market every single day. So I wait another bar, and the next bar is, now it's a red bar with a wick on top, okay? And so now, what are they going to buy this bar? Well, turns out they actually sold it. They put another red bar, again, not convincing, and then another red bar after that. So at this point, we are at 10:25, about an hour into the open. I rarely trade the open because to me, the open is amateur hour, and this is giving me a flavor of what the day may shape up like. So it doesn't look like to me that this is going to be a day where the market just is going to be going straight up. It looks more that this is going to be, so I'm looking, is it going to be a trend-based day or a range-based day? So to me, at this point, I'm defining this as a range-based day. Why is that? We have an equal amount, let's just say, of red bars versus green bars. This is not convincing one way or the other. When I see this, it's all about the price you get into the market, right? Because if you have a bull trending day, you buy for any reason. If you have a bear trending day, you sell for any reason. When you have a trending day, what matters is that you buy at support and you sell at resistance. You're going to keep hearing me say that. You buy at support and you sell at resistance. So where is support? Where is support? Support, okay, for me, is going to be somewhere down in this zone right here. And if you just look to the left, you'll see where all this support is. Now, it all depends on how the market comes down to support. So let me explain. So at this point, I am thinking long because the market is in an uptrend, but I don't want to buy high. I want to buy low, sell high. But let's see what happens, okay? So the next bar is a red bar, okay? So it's a red bar, decent sized red bar. This is 40.8450 to 40.77. That's what, about 7 points. All right, let's see what happens next. Green bar, but you could see the lack of conviction. And just because there's lack of conviction doesn't mean you can't trade, but you have to pick your spots very carefully because you don't want to buy too high, you don't want to sell too low. At this point, and you can see the alternation, red bar, green bar, red bar, green bar. So at this point, it's confirming my thesis that we are in a range-bound situation. Again, red bar. All right, big red bar. Now, based on context, okay, if I see a big red bar like that, in some circumstances, I would want to be looking short. But remember, with the context of this that just happened yesterday, do you really want to short at this point, unless we have more evidence, but at this point, do you want to short against yesterday's trend and also the day before that? So we're in a high trend. So what you want to be doing when we're in a trend is you want to buy pullback. So now I'm thinking, where is a good time to buy? I don't want to buy right after that big red candle. I want to see what happens because they may print another big red candle, okay? Another red candle, this one is closing at its low, but it's smaller than the prior red candle. but let's see what happens. Again, I am not, it's going to take a lot for me. In order for me to short this market, what I'm going to have to see is the market go down heavily, retrace, and then I would short the bounce. But at this point, I'm still, because if you just look back, like one of the things that people miss is that just look back on what's been happening. What happened here just yesterday morning? They sold it and then they bought it. They sold it and they bought it. The day before, every pullback they sold and they bought it. So until further notice, okay, I'm not going to assume that this is the top of the market, okay? I'm going to assume that this is a pullback. At some point, I will change that view, but I'm still thinking, listen, we have this uptrend. Again, it's not perfect trend lines, but we have this uptrend. Now I'm thinking, where can I possibly get long? It's going to take me some more to convince me that the market has not shifted to short. Now they put in a green candle, right? So if this was truly a market that I needed to consider shorting, why are they putting in this green candle right here? And this is, and I look back and this is very similar to this, right? We had a sell-off and then we put a green candle. Now, as the market's bottoming out, what we're looking at here is saying this could be a pot. Now, at this point, after this candle, I'm thinking we're at support. This could be a potential bottom for this cycle here, okay? I don't know, but this could be the potential bottom. So let's see the next candle, okay? So what happened is right after, so what I ended up doing, you'll see my arrows here. So you're going to notice that I scale into my positions. So after this candle closed as a green candle, I put a limit order to buy right at the high of this body, okay? And basically, the way I'm framing this trade out is that I'm willing to add, okay? I'm willing to add lower. And the way I frame my trade is that ultimately, I see support here, but I also see support down here. So this is, at this point, my buy zone. And again, that I'm also going to be looking, this is just my initial thesis. I have a stop down here as a catastrophe stop, okay? 99, unless something crazy happens, something blows up somewhere in the world, and I get stopped out. That's why I keep the stop down here below support. But what happens is 99% of the time, what happens is I get out at a different place depending on how the price acts. So you have to give yourself some room so you could scale in, and you also not be scared that if the market goes one tick, let me tell you what not to do, okay? Let me tell you what not to do. And this is what a lot of people do. If you think that, let's just say you have the same theory that I have, and you say, you know what, this could be a potential bottom, and you buy here, and you put a stop right below here, that's a mistake, because that's a weak hand. And what I mean by weak, not that you're weak, what that means is that something is wrong with your position, that you're scared, and you're keeping that stop super tight, because oftentimes when the market is trying to find the bottom, the market will gyrate up and down and maybe go past this by a tick, maybe go past it by 2 points. Who knows? We have to see how it forms. But having your stop right below here, okay, is the market. When you say the market is looking for your stops, they're not looking for your stop specifically, but there will be a lot of stops underneath here, so you don't want to have your stop here. So at this point, I don't know where my actual risk is, in the sense that I know we're in a buy zone and I have my catastrophe stop, but I have to see what happens, okay? I have to see what happens. If I saw, for example, a big red candle, so let's just say, so what would get me out? Now I'm long this trade. Right now I'm long. Now, if we had a red candle, all right, so let me show you. If right now, so I have my catastrophe stop down here, but also is if they printed a big red candle like this, okay, as the next candle, I would get out at the close of this candle, but I would wait for the candle to form, because what if the market comes down, okay, and like it did here, it was red at one point, but then they closed it higher? Why would I be getting out when it's closing as a green candle? So what would get me out at this point is either my catastrophe stop, which 99% of the time doesn't come into play, or if I saw them put a big red candle closing at its lows, that would get me out, okay? But you have to plan for different situations, because that might not happen. So next candle. Oops, sorry. Trying to, this is what you get. This is my first attempt. So I'm long one position and I'm willing to add, because I'm just trying to feel out the market and see. I could always add as the market keeps going up, right? Now they print so now what happens is they print a red candle, okay, but it's barely a red candle. So now what I do is at the close of this candle, I buy another position because the theory, it's not going down, right? If this was a strong selling trend, now at this point you have green candle, small red candle. This is bottoming action to me. This is bottoming action to me. So I added a second position. Okay. Another small nothing candle, but again, it's not going down, right? That says something. It's not going down. Okay. Now, once I see this candle, okay, and it closes at the high, I add another position. Okay. So now at this point, okay, so that's pretty much, so now at this point, now let's frame my trade. So this was the indecision point, and this is where we don't know what's going to happen. But now this is what ended up happening. So now at this point, I am long from, let's just use this box. Let's get this out of the way. So let's say I'm long an average of, I don't know, maybe around this point right here. Or you'll see my multiple buys I averaged in. So let's say I'm long from here. Now, once this candle closes, now my stop is here. Okay? So now this is my risk. Okay? This is my risk right here. Okay? Because at this point the market formed. Okay? Now my stop is below here. Okay? Now is the time to move your stop below there because it's formed the bottom, and now we know that. And now at this point, I'm just managing. I'm not going to add because I know that there's resistance up here in this zone. So so we have another green candle, looks good, another green candle, and I'm not going to add because I don't see much to the upside at this point. So let's see what we got. Next candle, another big green candle. But now I'm aware that we're coming up to resistance, right? So now at this point, my stop still needs to be down here, okay? Because I got to watch price action. And so I may, at any point, okay, I could decide that, you know what, the risk to reward isn't there anymore. And if I wouldn't take a new long, then maybe that's time to get out. But I'm going to watch price action. So what happens in the next candle? Red candle, okay? So now I'm going to see what happens here because now I'm on high alert. And again, my mechanical stop is still back here, but I'm not planning on getting out on my stop. I'm planning on seeing what happens here. I don't want to give this too much more room because this is now a red candle. Now, what are they gonna do after this candle closes? All right. So what they ended up doing is they ended up buying it. They didn't even go below it. So still, all systems go. Long is still looking good. All right. So there's no reason how I trade to get out just yet. Okay. Now this is another green bar. It's coming up to resistance. Now I'm thinking at any point to just hit the close button, right? Because how much more is there left in this move for this particular cycle? I don't know, but the bars are getting smaller. We didn't have continuation of big green bars. So now I'm getting close to thinking this is an area where I would want to sell. So let's see what happens next. We have another small red bar. Again, not ready. So still, since it's a small red bar, I'm still not convinced that it's the time to get out just yet. But then when I see that from this red bar, see, because what did they do? I'm always looking at what's been happening. What did they do when this red bar closed? They bought it. As a matter of fact, there's a gap here. They didn't even give it a chance to go back. Now, this red bar, what happened is that they started to buy it, and then it failed immediately, and now starting to go back down, out. I was all out. Usually, I won't scale out on my exits. I'll scale into my entries, but not my exits. So I was all out there. So if you look at it in terms of pulls here, I risked 40.62 to 40, let's say 7. That's 8 points. So my risk was 8 points, and I got out. So 70 to, let's just call it 15 points. So 8 points. So that's about a 2-to-1 actual risk to reward. So there's an example. I just took one trade today. The market ended up going higher from there. It did break out, but at this point, it was Friday afternoon, and I just didn't want to deal with this potential because you see how it struggled up here, right? So I didn't want to deal with all this, so I just got out there, and that was a good trade. It did continue higher, and then it sold off at the end of the day. But that's just an example of my thought process and how I look at it, what I'm looking at. And as I do these videos, you're going to get a good flavor on how I trade it, and that some of the things that I say, the reason why I'm able to say them is because I've been watching this market exclusively for 2 years. 2 years, every day, all day, the overnight session, all the sessions that it trades 24 hours a day. I'm not up 24 hours a day, but I'm very aware of what's going on 24 hours a day. This is an example of a trade that I took, and this one here was a pretty simple trade. Sometimes they're not as simple, sometimes they're different, but I hope to, with my daily journal, to show this to you so you could apply this in the markets that you're trading. Thanks, guys.